Is the Wall Street Journal giving us a hint about what might be happening very soon in the precious metals market? We're going to talk about that. Also, we're going to talk about this notion that when things get really bad, yes, the doom and gloom, is that going to be the turning point for the metals, for the silver price, the gold price, the platinum price, for that matter? We got some big updates. We are going to touch on oil again, but we're also going to talk about food shortages. Yes, that primary need that all of us basement dwellers have, right, to eat. Now, some of us may live on ding-dongs alone, but the rest of us, we need other food to sustain ourselves. We're going to talk about some recent news regarding food shortages. And look, I'm not a big prepper, okay? I'll say that right off the bat. I think it's a smart thing to do. Maybe I've been lazy. About the most I prep is, well, here. Hold on. There. That's part of my prepping. 3 boxes of ding-dongs. I know somebody's getting, now seriously, I've got some food, but we've got to talk about these food shortages that are coming down the line and how that might impact us. Also, when we look at what's going on with oil and we look at what's going on with food and we look at what's going on in the economy, what is it telling us about where we're headed? And what is it telling us about the value of these metals that we all like so well, that we hold so fondly and dear to our hearts? Are we making a smart move? You want to know. I want to know. Look, the best we can do is go down this path together. We all have a flashlight. I'll shine my flashlight out there for you tonight. You need to read all the information. You need to digest everything and make up your mind for yourself, right? You know that. You don't need me telling you that. We're also going to talk about what the mainstream media, now we've talked about this bifurcation in the world that's going on right now, but what's the mainstream media talking about that's a big, big deal about this geopolitical situation? BRICS, ASEAN. Guys, it's a big, major situation that's unfolding, and we got some more hints about what's going on right now. So let's review really quickly, okay? We touched on this morning, but let's talk about some doom and gloom in the economy right now, okay? Yes, we could see panic buying for silver and gold, but first, we're going to need to see some really hard times in the U.S. economy. And are we headed for these really difficult times? We just touched on a few things. Number one, the banking system is on life support. That's a given fact. The banking system in the United States is in big trouble, only surviving through outside artificial help. Life support, if you will, correct? We didn't cause the problem. We're just recognizing that it is the problem. What about the real estate market? Mortgage applications are at a 27-year low, okay? Mortgage applications compared to 1 year ago are almost 30% lower. The real estate market is heading toward a cliff, a big, big cliff, okay? Things have been so convoluted. Things are so crazy right now, but that's the reality. That impacts all of us, absolutely, without a doubt. Trucking volumes down 10%. We covered that. The choo-choo trains, right? The train volume. That's a major way that goods and services are moved around the country. Down 5% year over year. Walmart's cutting pay. That is nothing but a signal that the labor market is cooling off. The job market, is cooling off. These days of companies having to pay people more and more and more. If Walmart, the biggest retailer in the country, is lowering wages, what is that telling us? Okay, but there's more, guys. There's more. Consumers living paycheck to paycheck. All types of articles out there. I've already gone over a lot of this with you guys, but this is painting a picture that's not real good. But there's more, okay? There's a lot more. I want to read you just a quick headline regarding what is going on in the business world. Zombie companies. Are you familiar with what a zombie is? feels like you should see some zombies popping up behind me here in the basement. And if I keep cracking jokes about Coin Shop Chris or Suzie, they may come out like zombies and get me. But nonetheless, you know what a zombie is, right? Oh, hey, thank you for the super chat. Wow, not Chili Boo Boo? Not what? Yeah, not Chili Boo Boo. Take my Monopoly. Take my Monopoly money. Well, I'm easy. I'll take your. Thank you. Seriously, super chats, guys, are super appreciated, and so thank you for that. What a nice gesture. Zombie companies are companies that this is a kind of a recent term, okay? But you got to understand what's going on. We were in a 0% interest rate environment for so long in this country that a big segment of our companies, big companies, mid-sized companies, even smaller companies, were only surviving because of the zero interest rate policy of the Federal Reserve. They were called zombies, okay? Now, we're having higher interest rates. These companies that borrowed all this money, the only way they were surviving was by borrowing more and more money. It would not be unlike you living off your credit cards. But your credit cards had a 2% interest rate, a 3% interest rate. So you were able to do it for an extended period of time. But then the day of reckoning came and interest rates went up. Right now, interest rates on credit cards are darn near 22%, the highest they've ever been. That would wreak havoc for you in your personal life. Well, that's the same thing that's going on essentially with all these zombie companies. They borrowed money for years and years and years, and they have to roll over, refinance the debt every 3 to 5 years. Now waves of that are coming due, and the rates are significantly higher, and the banks don't have the money, go figure, to loan. So they're even charging higher interest rates. This will demonstrate it right now. From Market Insider says the Fed could still kill off more zombie companies even after bankruptcies have spiked 54% since last year. U.S. bankruptcies soared by 54% year over year in August. Thank you, Chuck Robertson. You distracted me. These darn super chats. Thank you, Chuck. Soc General warned that more business failures could follow beyond all fears. Okay? Now, the Federal Reserve has hiked interest rates 11 times over the last 18 months. We knew that already. The Fed has embarked on one of the most aggressive monetary policy tightening campaigns ever. Interesting. Hiking interest rates 11 times over the last 18 years. And this high rate environment and more expensive borrowing costs, according to Soc General, have sparked a wave of business failures that may continue to grow. In August, there were 634 commercial Chapter 11 bankruptcy filings registered in the U.S. That marked 54%. You've told us that 3 times now. This new normal certainly seems astonishingly abnormal to me, Soc General Research Albert Edwards wrote in a note Thursday. Yet, if you look just below the very large cap stocks, the old normal still applies, with higher rates triggering a surge in corporate bankruptcies that will surely lay low the overall economy. Mid and small cap companies appear to be in particular trouble compared to larger corporations. Edwards pointed out that these businesses are key drivers of the overall economy, especially with regards to employment, and more bankruptcies in this segment could prove dire. So the situation, guys, is real easy. Like I said, it'd be like you living off your credit card for 3 years. And then suddenly the debt had grown, and at the same time, the interest rate goes way up. You get to a point where you can't pay it. And that's what a lot of these small and mid, but the big thing is these are some of the bigger employers in the country as a whole. All right? These are the engine, right? The small business engine of the economy. Now, let's back up a minute, because I got a bone to pick, and they pointed it out in this article. The Federal Reserve, if they stop raising rates right now, would have gone through one of the fastest rate hike cycles, in the history of the world. Think about that. The fastest rate hike cycle ever in the United States. I want you to think about one thing. There's other lies he's told us, but 2.5 years ago, Jerome Powell in the United States Federal Reserve made it explicitly clear 2.5 years ago. He said they were not going to raise rates until late 2023. Wait a minute, you might be asking. Isn't it late 2023 right now? So if we had believed the Fed back 2.5 years ago, why do people believe the Fed? Why? If we had believed them 2.5 years ago, we would still have 0% interest rates right now. But suddenly, whenever the Fed says anything, everybody's like, oh, the Fed said this, the Fed said that, the Fed. I mean, it's almost worse now than it was 5, 6, 7 years ago. Everybody's so crazy about what the Fed said they're going to do. Why do we believe them, right? Now they've raised rates. Now this problem they created with all these companies, they were like drug addicts, right? They got addicted to 0% interest rates. And now the Fed's like, hey, boys, sorry, no more fentanyl or no more whatever, alcohol. You know we've been feeding you booze for the last 15 years, but we're cutting you off. You're done. Time for some hard medicine. It's going to get ugly, guys. It's going to get real ugly, and it's going to happen real fast. Now, let's talk about oil, and then we're going to talk about food shortages. What does that mean? How does this all tie together? Yes, food shortages. Now, we talked about the real estate market. That affects you. That affects me. I'm in a house, in a basement. You're somewhere right now joining me, somewhere all over the world. The real estate market does impact us, and it's heading for a likely cliff. Be prepared. I absolutely, okay, I'm not offering financial advice, but if you were to ask me, hey, Ron, we're thinking about buying a new house. We're thinking about moving up, buying a bigger house. My kid's thinking about buying a house for the first time. I would tell you that I'm often wrong, but I would tell you very strongly that I think now is not a good time to be buying a house. I could be wrong. Could be wrong. Hold on a second. Excuse me. I could be dead wrong, right? We could go into a hyperinflation that makes a $200,000 house into a $20 million house within 5 years. That could happen, guys, okay? But I just think right now, considering all the factors, what's going on in the market, if somebody's thinking about buying a house now or waiting a year, I would probably wait a year. But I could be absolutely dead wrong. What's the other thing that affects you every day? Food. What about food prices? What about food shortages? What do food shortages do to food prices? You don't have to be a Harvard-trained economist like I'm not to know that it's going to make food prices skyrocket. But let's touch on oil. CoinShop Chris provided me with yet another interesting bit of research from the Ron's Basement Research Department. Compliments of the Coin Shop Chris. I guess he put down his ding-dongs for a few minutes. Between ding-dongs, he decided to dig in a little bit. And old Chris found this interesting. You guys know I love Coin Shop Chris. Nothing. This is about oil. This is by Enos. I didn't say anus. I said Enos Ferrari. I don't get it when they put those little accent marks, and I don't even know how to do it on my keyboard. I deal with some mining executives that are in Peru, and they have I don't even know how to do it, but anyway, no more off subject, no more ding dong talk. Let's get down to oil. Oil's upward price movement is making the Federal Reserve's path towards 2% inflation more difficult. Oh, really? Wow. The crude market's rise is likely to have lifted overall inflation last month. Interesting. We're going to hear what the Wall Street Journal has to say, though, in 1 second. Don't let me forget that. And while core inflation, which strips out food and energy cost, has been on a downward trend, economists, including CoinShop Chris, worry that the higher energy prices could increase input costs for goods and services, leading to companies to raise prices on everything from airfares to furniture. This guy says, who is this guy? Oh, oops. What the heck happened here? Wait a minute. Well, anyway, this guy named Omer Sharif, president of Inflation Insight, says, I'd say the rise in oil prices since late June, early July has clearly put upward pressure on gasoline prices. No joke, buddy. They pay you to say this stuff? And will lead to a large boost in the August headline CPI index. That's Omer Sharif. He's the president of a company called Inflation Insights. Can you believe that? Let me reread that. I'd say the rise in oil prices, since late June, early July, has clearly put upward pressure on gasoline prices. Okay, yeah, right. We get that. We know that. And will lead to a large boost in August headline CPI. Well, guys, when oil goes up, gas goes up, according to the president of the inflation company. I think we probably could have figured that out ourselves. But the big deal with oil, we talked about this earlier. This is our new concept for those of you who weren't with us earlier today. If the world economy were a human body, think about your body, your face, your chest, your legs, your toes. If the world economy was your body, your left foot would be silver, your right foot would be gold. I know, I'm sorry. Or you can also throw platinum in with but your left foot is platinum and silver, your right foot is gold, okay? The blood going through the body is oil. It affects and touches everything. It's a big deal, okay? We know what's going on in real estate, retail, banking, the government. We know how screwed up all that is. At the same time, we've got oil prices skyrocketing. We got the strategic oil reserve at a very, very low level in this country. They kind of cushioned it from the U.S. by dumping a lot of oil out of our strategic oil reserve. And there's not a whole lot left in there to cushion any further blows, okay? Zombie companies that without economic troubles, just on the way they are right now, zombie companies, we're heading towards a wave of bankruptcies, business bankruptcies. You know what happens when a business goes bankrupt? Yeah, they don't pay all their bills, so that's a ripple effect. But they also get rid of a lot, if not all, of their employees. How does that sound? Now, we talked about this in the past, right? The Fed's going to be faced with a big choice real soon, right? Jerome Powell's going to be faced with a big choice. Do I let the thing crash, or do I turn on the printing press, right, and fix it all magically with unicorn fart dust money, paper money? I'll just print money. That'll save all the companies from going bankrupt. That'll save all the banks that should be going out of business because they made bad investments. Actually, a lot of this started back in 2008 during the great financial crisis, right? When these wealthy Wall Street bankers were abusing the system and should have gone to jail, a lot of them, right? In Iceland, they put these guys in jail. You know what? Only one person went to jail in the United States. Actually, most of those people, they all got bailed out, right? And then they got to collect big, hefty bonuses. They got to gamble with your money. And if the gamble had paid off, they'd have been paid big, massive bonuses. But when the gamble didn't pay off, yeah, right. And there were going to be catastrophic losses. You know what? The Fed came in and saved them all. And they still got big, fat bonuses. What do you think about that? Really, a lot of this stems back to 2008. We can't let anybody, any of the big, rich people, the big 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I ring the bell 10 times when we get to 100 thumbs up. Thank you for the thumbs up. Thank you for being here, okay? But we can't let, I mean, the same thing just happened back in March and April when Silicon Valley Bank got in all that trouble. What's the other one? State Bank, whatever. They're all started with an S. I'm going to take a drink of water. I'm not going to mute the microphone. Excuse me if you hear me slurping. Oh boy. Okay. The same thing happened back in March and April. Silicon Valley Bank. You know what? A lot of the depositors, a big amount of them, had more than $250,000 in the bank. Oh, okay, Eisenhower, Albert Eisenhower. I remodeled my kitchen once with this guy. He was the funniest. I was in my 20s and I was remodeling my kitchen. I hired him. He was a good carpenter. And when I would make mistakes, he would call me Albert Eisenhower. Anyway, right? Those people that had more than $250,000 in Silicon Valley Bank, they knew anybody. I mean, if you've got 250 grand, you should be smart enough, and you got 500 or $1 million, you should be smart enough that if you're going to keep it in a bank, that you know that only 250,000 of it is insured. But we couldn't let those people. They couldn't take a bite. They couldn't take a hit. No, we need to save everybody. Bail them out. Right? I'm sorry. I get a little ticked off. You know, that's what makes capitalism great, is if you screw up, you pay the piper. You know, a lot of us maybe have invested in precious metal mining stocks. We've taken a big hit over the last couple of years. How about we get a bailout? I mean, what the heck? It's not going to happen. But, you know, if I put my money, all right, I'm done. I won't talk. I'm done with that. Guys, this is on a tangent, but any of you that are in the precious metals sector, you know there's all this news about banks shutting down coin shops, okay? Is it happening? I keep getting more emails and, the banks are at war with silver. You know, absolutely. There's been some companies that have had banking issues that are in the silver and gold bullion dealer, bullion retail coin shop, that type of thing. This is just my opinion, you can disagree with me, is it a concerted, organized effort by the banking system to shut down coin shops so that we can't buy bullion? No. I bet that it's more of across the industry. Any companies that are dealing a lot in cash right now, it's probably more of if it's anything, a move towards dissuasion of businesses dealing with large amounts of cash. They're taking cash away. Cash, I think I shared with you, I talked with some guys this was a week ago, that are pretty high level in the financial services industry. We got a lot, believe it or not, St. Louis has a lot of big financial service companies, big financial service companies. And I asked them and they agreed, you know, somewhere between the next 5 and 10 years, we're probably not going to have cash anymore. Okay. It's just reality. Now, you know, look, nobody has a crystal ball. Those are just ideas, but they work in that industry. I would think they know a little more than, you know, we know a lot more than the average bear, but from someone's perspective in that industry, that's what they're saying. I don't think that, that there's any movement afoot that's going to prohibit you from acquiring physical silver or gold. Okay, I could be wrong, right? Hopefully, you already have a good amount. That would be smart, okay? An amount that you feel comfortable with, an amount that represents somewhat of a percentage of your overall net worth. An amount that if everything did go completely to kaputty, right, that you would be okay for 6 months. And I'm telling you, I like to preach. People ask me, Ron, how much silver should I have? How much gold? How much platinum? What's the appropriate amount so I can feel safe? Well, here, that's it. To me, that's an easy answer. Figure out how much money, measured in fiat, unicorn, fart dust, paper dollars, you need to live for 6 months. And if you can get that much saved up, that much physical metal, any combination, silver, gold, platinum, whatever, I think you're okay. Because if things really get bad, excuse me, really bad, okay, we're likely going to see a revaluation of the metals. That'll mean that 6 months worth will be more like a year or a year and a half worth. Yeah, I don't want you to leave. I just want to go get my water refilled. Can you please excuse me for approximately 22 seconds? Sing Yankee Doodle Dandy in your head when I'm gone, and I will be right back. I'll keep talking. I'm not leaving you. I'm not. I'm just over here filling up my water jug. I'm coming back. Okay, I'm back. Sorry about that, guys. I had to walk through the green screen. That's what I think is a good amount for you to have, for anybody to have. 6 months, okay? Dollar cost average, that's a big recurring theme for us basement dwellers. If you're trying to build a stack up, dollar cost average, that means buy the same amount every week, every month, every 3 months, whatever time period you decide. Don't worry about the price. You know, if you see a big dip in between and you've got some extra money, sure, go for it. Buy a little more. But overall, just try to dollar cost average. All right. What's the Wall Street Journal saying? Well, guys, we got a big week this week. CPI, inflation numbers, Wednesday. Big market moving information, right? We could be in for massive moves in the metals prices on Wednesday. And then that's punch one. Punch two will be next week when we have the Federal Reserve monetary policy meeting, blah, blah, blah. So let me tell you what the Wall Street Journal, I thought this was very interesting. I'm just going to give you the headline. But it says, Wall Street Journal, an important shift in Fed officials' rate stance is underway. An important shift in Fed officials' rate stance is underway. Central bank is likely to pause rate increases in September. Wall Street Journal. Then, take a harder look at whether more are needed. That's by Nick Timiraos. That came out this morning at 5:30 a.m. Do you know who Nick Timiraos is? Nick Timiraos is called the Fed Whisperer. And they call Nick Timiraos at the Wall Street Journal the Fed Whisperer because it's a well-known fact on Wall Street that they use him as kind of a conduit to pass information through to the market. So they might be playing games with us, but at this point, what they're saying is that we aren't going to get a rate hike in September. Okay, and that's pretty much anticipated right now. Based on everything we're talking about, based on all these situations, and we're still going to talk about food.
Important shift in Fed officials' rate stance is underway.
Oh, wow, that's pretty.
Central bank is likely to pause rate increases in September, then take a harder look at whether more are needed. By Nick Timiraos. September 10th, 2023. 5:30 a.m. Eastern Time.
Who's this? Coin Shop Chris?
For more than a year, Federal Reserve policymakers were unanimous that they would rather raise interest rates too much than too little. That is how serious they considered the threat of persistently high inflation. That is changing. Some officials still prefer to err on the side of raising rates too much, reasoning that they can cut them later. Now, though, other officials see risks as more balanced. They worry about raising rates.
I have no idea how this happened.
That turns out to be unnecessary or triggering a new bout of financial turmoil. The shift toward a more balanced buy.
I'll have to figure out how to do that. That's pretty cool. She'll read the articles for me. We'll have story time. We're going to talk about food because food is critical to you. Food is critical to me. And we've got big news about food shortages. 5 areas where we're seeing food shortages coming down the road. Here we go. And again, this came from Coin Shop Chris. Thank you, Chris. Thank you. Okay. Hey, Annie Oakley's here. Hello, Annie Oakley. I love saying that name. Good to see you. Okay. 5 looming grocery store shortages you need to know about. 5. Says food security has become a weighty buzzword, blah, blah, blah. Yeah, we all remember what happened during the health crisis and certain things weren't available. Unfortunately, over the past several years, there's been an unprecedented number of threats to this, which is our food security, popping up left and right. Blah, blah. Here we go. All right, let's talk about the 5 big areas. Number 1, rice. A shortage of rice is still on the table into the second half of 2023. The world's rice supply has been ravaged by Russia's invasion of Ukraine, as well as damaging weather in both China and Pakistan. So rice, going bye-bye. Excuse me. Pasta. Mamma mia, can it be true? Yes, it can. The pasta problem in Italy actually got so bad this year that the country's government met for crisis talks back in May in order to stop it from boiling over even more. Boy, they have to throw in a little bit of humor with that, don't they? So, rice, pasta. Number 3, chocolate. Oh my gosh, Hershey set off a panic last year when it warned of a possible candy shortage leading into Halloween. But the problem was unique to the chocolate manufacturer, a byproduct of higher demand and supply chain issues. Okay. Number 4, salmon. There's a saying, there are plenty of fish in the sea, is starting to lose some of its meaning. Fishermen in both California and Alaska have noticed a steep decline in salmon populations over the past year, with Chinook or king salmon taking the largest hit. And number 5, who knows number 5? Flour. The price of flour is already up 9% compared to last year, according to the Consumer Price Index, and analysts predict that Americans will continue to feel the effects of a flour shortage into 2024. This could additionally spell trouble for many other beloved foods, including bread, pizza, pancakes. I made pancakes for my daughters this morning. Cookies, and baked goods of all kinds. So there you have it, guys. Flour, salmon, chocolate, rice, and what's the other one? What am I forgetting? Pasta. Food shortages. We know that the geopolitical situation in the world is putting big constraints on the food supply chain, okay? We know that the bifurcation going on in the world, I hope you know, the bifurcation going on in this world is changing the dynamics in the silver market, the gold market, the platinum market, the palladium market, the aluminum market, the nickel market, the cobalt market, the rare earth elements market. Have you heard me talk about enough markets? The bifurcation in this world. What Andy Scheckman said this, and I think it was brilliant, and he brought up this great point. They leave little crumbs. There's little crumbs that we need to put together to kind of put the big picture together, Andy. Like, I know one thing he talks about, central banks buying record amounts of gold. China bought 30 more tons of gold last month, 10th month in a row. China now has over 5,000 tons of gold, at least, right? They're the number 1 gold producer in the world. What do we know? What's the most recent indication we have of this bifurcation, this major change going on? This last couple of days was the big G20 summit. Okay, G20, the world leaders get together and try to figure things out, work together. Okay, well, you know what they're calling it now? They're calling it the G18 because, of course, Vladimir Putin was not there. But more importantly, and really more shockingly, okay, President Xi of China didn't show up. Now, we talked about this earlier, but now I'm seeing mainstream headlines bring up the fact that President Xi didn't show up. And the official communique, right? At the end, they put out a big written statement from the G20 leaders, but they all have to agree on it. In regards to the situation in Ukraine, it was worded much more softly, I guess you could say, than last year, which has been viewed as a somewhat of a victory for, I guess you would say, the BRICS-related countries, because let's be real, right? Those countries are all kind of sticking together. Brazil, Russia, India, China, South Africa. Don't forget now, we can add Saudi Arabia, United Arab Emirates, Iran, Argentina, Egypt, and Ethiopia, right? 11, BRICS plus, whatever they're going to call it, right? There's 6 more countries. There's 11 countries now. Things are just completely changing. I know you got to be ready. You've got to be at minimum mentally prepared for about anything right now. I mean, think about the things we've lived through in our lives. Most of you have lived through the 9/11 thing, the health crisis, the health crisis. Easy for me to say. Right? We've lived through the tech bubble burst. We've lived through the great financial crisis. We've already lived through some big deals, quote unquote. I got a real strong inclination that what we're going to live through in the next decade could match or go way beyond what we thought were some extreme situations. I could be dead wrong, okay? But I could be dead right as well. And when I look at the crumbs, like Andy likes to say, right? The fact that the G20 has now become the G18. When I look at the fact that I know that the news that they're feeding to the main population, it's not even the tip of the iceberg. It's you know, like we have to understand that. Like when the Fed talks, when Jerome Powell talked at Jackson Hole just a few weeks ago, he's giving us the tip of the iceberg. There's a lot of other stuff. Do you really think that at the Fed, behind closed doors in meetings, they're talking about the stuff that Jerome talked about during his public statement, his public quote-unquote address? Sorry, I'm very thirsty tonight for some reason. No, they're talking about all different things. They're giving us, I don't even know if I'd say it's the tip of the iceberg. It's more like a blown up inflatable little unicorn thing. And hey, look over here, look over here. There's a lot going on right now in the world. Okay. We need to be prepared for almost anything, mentally and monetarily. Now, I choose to hold some silver to protect myself. I hold a significant amount of, precious metal mining stocks to protect myself and my family. I choose to be debt-free, completely debt-free. Look, there's an old saying, gold is the currency of kings, silver is the currency of gentlemen, and debt is the currency of slaves. And I happen to believe that right now. If you're sitting on a low interest rate mortgage right now, you're sitting pretty good. You got lucky. You're in pretty good shape because you're paying 2.5%, but you can go get a treasury bond that pays 5%. You're doing pretty good, right? You're okay. But if you've got a lot of other big debt, car debt, credit card debt, student loan debt, any of this debt that's got higher interest rates, I highly recommend trying to make big dents in it. Okay, not giving financial advice, just making believe you asked me that question, which you didn't. So I'm offering you unsolicited input, if you will. But that's what's going on. They aren't giving us all the information. Look at what's on. Go turn on MSNBC. Go turn on CNN. Go turn on Fox. Go turn on any number of quote unquote news channels. And what everybody else out there thinks is news, we know is really absolutely more just pure entertainment, attempts to sell advertising, okay? Now, like I said earlier, I choose to own some physical silver, own some physical gold. No, I don't own physical gold. I own physical silver. I own gold mining stocks. But I want to tell you, my last big silver purchase that I made, which was about, 2 months ago, 3 months ago, was from this company right here, who happens to be now a sponsor of my channel, Pimbex, okay? They have a great selection of silver, of gold. I learned about the company from you, from some of my viewers, because I was mentioning, I think I'm going to buy some silver. It was when silver got down. I made a pretty good buy. I think it was when silver, was it 18, 19 or something? Anyway, and then a couple of you said, check out Pimbex. They've got great service and a great selection. And I thought, yeah, I'll check out Pimbex. What the heck, because I was kind of growing tired of some of the other bigger online bullion sellers. And when I checked the prices, I was like, wow, their prices really are better. But then, of course, I dug in and read the reviews, because I always do that. That's the big, I heard somebody say this first. Don't buy the metal first. Buy the company that you're getting it from. Make sure you're comfortable with the company you're getting it from. So, hey, I think Pimbex is best. They help make all the videos possible, help make the channel possible. Pimbex, Pimbex. I think they're best. Check them out. I think you will too. Guys, thank you for being here. It's been great. It's Sunday night. Hopefully we can relax for a little bit. I'll see you this week. It's going to be interesting. Wednesday is the big day. We'll see how that plays out, but take care and I'll see you soon.